Welcome back. You're still tuned into Trading Hour. Jana Small Finance Bank, the stock is on our radar now. It is down over 6% after its Q1 earnings. The company's profits have fallen 40% while gross NPAs have risen too. To understand the quarter gone by and most importantly, the way forward, we are now joined by Ajay Kanwal, who is the MD and CEO at the company. Mr. Kanwal, good morning. Thank you so much for joining in. You know, the general suggestion has been that the worst is over for the industry. That is something that you mentioned in the last quarter conversation as well. We spoke to Mr. Mishra of MFIN recently. He said maybe the worst is behind the sector now. But still, we have seen a spike in gross NPA for Jana Small Finance Bank by 20 basis points. Can you explain what went wrong here and which category particularly led to that spike in gross NPA?
So good morning to you and the viewers. Yes, the 30% of our book as of March 25 is MFI book. 70% is non-MFI, which is largely property-backed, affordable housing, micro-LAP and others. And we have seen the first quarter, the increase of delinquency in NPA in our MFI book. I guess all of us were a bit more optimistic about when it will plateau out. And it has carried on a bit more than we all anticipated. Certainly we did. And that is where it's been an increase of gross NPA to 2.8%. It was roughly 2.7, so it's, or rather 2.6% as we finished March. Nothing that shakes us significantly, but it certainly makes us work harder.
What was the extent of pain, particularly in the MFI segment, 30% of your book? And do you think in Q2 that pain persists, lingers, or are there signs that it's peaked out now?
So the gross NPA for the MFI book is 5.7%.
Okay.
The gross NPA for 70% of our book, which is a secured book, is 1.5%, with a net NPA of 0.8, and in the unsecured book, the net NPA is 1.2. So we are very well provided, and we have taken additional excellent provision of 150 crores in Q1, which is why you see the PAT is at 100, to make sure that we are very well provided as we go into the next few quarters. We do see a small drop in Q2 and a significant drop in Q3. So what we saw, flow of customers both from Jan to March and a bit in April. So these are the 4 months which will then flow into NPA, which is why it will go up into Q2. And then there is no fresh incidents of any change externally. Our collections in May and June are at 98.6, 98.8, 98.6. So I think we are now looking at a very reasonable output after that. So Q3 will be a significant decline. Q2 will be a small decline. And there's nothing else which tells us that this should get worse then.
So what are the numbers? 5.7% in Q1. What could Q2, Q3, Q4 look like if you had to, make an estimate?
Tough to answer that because it's a denominator and numerator also.
Yeah.
And one of the things that has not helped the MFI business for us is our total book, which was around 10,000 crores, is down to about 8,680 crores. So the denominator has shrunk. So obviously the gross NPA looks more elevated. How much we grow the denominator will be one question. We would like to grow that very, very carefully. It's a short-term pain for sure, because when your MFI book drops, you do lose revenue. On top of it, you do have increased credit cost. And of course, for collection, you put in extra collectors. So the cost line also doesn't help you. So all three lines have not worked for us in the first quarter. We'll see some relief on the cost side because we are fully capacitized for collections. We should start seeing some positive shoots on the MFI book, on the growth side, and on Q3, then we should see the drop off in the NPAs. Q4, if all goes well, as you know, MFI does reward very well in good times. So if all three lines go right, then I think it should be very positive. But importantly, you see our secured business is doing extremely well, which is where our primary focus has always been. That's 70% of our book. It has moved to 71% in the first quarter. Numbers on gross NPA, like I mentioned, is 1.5%. And we do expect this book to continue growing at a 35% rate for the year. So asset growth will be strong. NPA numbers are good. Yes, we will have to live with the MFI book pain for a quarter, at best two. which is Q3 should get better, but we should really see back to growth in a full form probably in Q4.
Right.
Right. Mr. Kanwal, thank you for joining in. Since we were on this subject, your credit costs also went up this quarter, right? What is now the ideal range that you see? You're anticipating some relief to come in from the third quarter. What is the ideal range for credit costs that you envisage for the full year? And the fact that you have 30% of your book as your MFI book, do you see that mix changing since your secured segment is doing so well, as you mentioned? Would you want to increase that exposure and that part of the mix to say around 75% or maybe even higher going forward?
So we have stated upfront a few years back that our secured book should be 80%. So that doesn't change. Secondly, we've said our unsecured book, we would like to put it under the CGTMSE and CGMFU program to prevent any event risk. So as we speak, as of June, 36% of our unsecured book is already under the guarantee program. So two things. We are at 71% secured. We would like to get to 80. We would like to put more and more of our unsecured book into the guarantee programs. 36% achieved. It was 28 in March. It is 36 in June. We'll probably see a 45 to 50 range by September. So two activities. Third, on the credit cost, I think it's very important to understand. See, a regulatory provision that is required is 46 crores for the quarter. On top of that, we have done accelerated provision, which is not required by regulation, of 150 crores. So the only way to think about it is, yes, we would like to create buffers for provision.
Right.
Unless we don't see a very clear environment ahead of us on the MFI piece. So is the credit cost really 150? I don't think so. With the accelerated provision, I'm sure there'll be some better answers coming up in the next 2 quarters. But to ensure that we are having a gross NPA of less than 3 and net NPA less than 1, which has been our stated stance, we have paid an accelerated provision of 150.
Got it. Okay, so Mr. Kanwal, then before we wrap up this conversation, what is the outlook for FY26? You had an ROA guidance of 1.6 to 2%. Currently, it's 1.1%. Are you on track to achieve that? What would the credit cost look like by the end of this fiscal? And what about net interest margins as well? They have fallen 50 basis points quarter on quarter. Can you tell us the FY26 plan? What are the numbers looking like broadly?
So let's start with the last one first. Gross yield of the asset book is 16.5 in March. It is 16.5 in June. So there is no drop off on customer yields. Due to a variety of HTMs and OMOs, some of the high yielding treasury book has been sold. The buyback is of low yielding, which is where the NIM challenge has come. Positive side is, you've seen the repo rate cuts. We have cut our deposit rates by 50 basis points from a 825 to a 775. So we should see cost of funds for the bank coming down in Q2. As we said, we will see some MFI growth. Maybe it's 2%, 3%, depending on how it all pans out. There'll be again a climb back of NIM because that is the highest NIM book. So yes, from a drop of 50 bips, which is largely not led by pricing of customers on the existing book, we will see some recovery back. We would expect a 7.2, 7.3, and which is what we said in the investor call yesterday. So that's on that piece. See, on the two important things, which are very strategic and clear in nature. We had said in our guidance 20% asset growth. We are reiterating that. We had said we will move secured much more than 70 to a 73, 75 range. We are committing to that. Last year, we could deposit book at 29%. This year, certainly we have reiterated 20%. That won't change, and we are saying cost of funds will also drop. So we are getting the two parameters right. A secured business gross NPA, which is the largest book, gross NPA, net NPA remains in very good shape. That doesn't change. I think the only variable which we have to address are the two variables, which one is how fast does the MFI stress come down? And second is, do we grow MFI? And if yes, how much? So just two really, that's a smaller part of a book, but takes majority of our time in this interview and of course for the bank.
It does, because that's something that the shareholders have been worried for as well, right? And that explains the 7% fall in the stock price as well. But thank you so much for joining us today and clarifying on a lot more aspects and talking about the future of the MFI industry as well. With that, we'll slip into a short break. We'll get more on the markets on the other side. Stay tuned.